Let's say you're thinking about investing in Dubai's real estate market, or you're just curious about what makes this city so exceptional, why people from all around the world are putting their money over here. Let me break it down for you. Hi, my name is Usman Siddiqui, a real estate investment advisor with Eon and Trizzle, the #1 channel partner of Iman developers for the past 8 times consecutively, and in the top 10 channel partners of majority other developers as well. Today, marking the very first video of this channel, I'll be giving you an insider insight on the Dubai's real estate market, on how things work here from A to Z, what areas deserve your attention for investment, and which areas to avoid. This video will be divided into 6 main sections, starting from why Dubai, all the way to the current market trends and where to invest. Each section is timestamped below, so you can jump right into the section which interests you the most. But don't miss out on the end of the video, as I'll be outlining 3 of my most favorite investment hubs of Dubai where I've invested my own money in. Before making an investment in Dubai's real estate market, you need to first understand why people choose Dubai. What really makes this city so exceptional, both from an investment perspective and an end-use perspective. The #1 point would be the safety, lifestyle, and global connectivity of Dubai. Now, when you just look at Dubai, or more broadly the UAE, United Arab Emirates, it ranks as the #1 safest country on this planet. And when you speak about the top 5 safest cities in the world, 3 of them are right here, which includes Abu Dhabi, Dubai, and Sharjah. Secondly, one of the biggest reasons to why so many people move to Dubai, especially from the UK, US, and India, is the tax-free environment. Now, in the voice of it, it might not sound so big, but when you're living in a country where you're paying 0 taxes, the financial freedom and ownership feels completely different. However, what most people or agents won't tell you is the one tax that is implied in Dubai's real estate market. A 9% corporate tax on profits above 375,000 dirhams, not revenue. Now, that is also equivalent to $100,000 or 75,000 pounds. But what you also need to understand is that when you compare this to other major countries such as the UK, a corporate tax of 19 to 25% is implied with no minimum starting value. That means on a profit of even just £1,000, you are paying a 19% corporate tax. Speaking about the US, you have a 19% flat corporate tax rate, again with no minimum starting value, and the corporate tax rate in India ranges from 15 to 30%. Moving on to Dubai's business ecosystem and expat-friendly environment, which is truly one of the strongest pillars of the city. Dubai offers over 30 free zones, each tailored to different industries, from technology and media all the way to healthcare, logistics, and finance. And here the real advantage is that as an expatriate, you can enjoy 100% foreign ownership of your business. Here, 100% foreign ownership in designated zones isn't a bonus, it's a baseline. Setting up a business in Dubai comes with real lifestyle benefits. Entrepreneurs and investors can obtain 2 to 5 years residency visa, and through dedicated programs like the 10-year Golden Visa, long-term residency is now available for investors, real estate owners, scientists, and high-skilled professionals. #4, political stability and transparent regulations. UAE ranks amongst the highest in the world for government efficiency and public trust in leadership. Whether it's updates for the Golden Visa eligibility, free zone policies, or foreign ownership laws, changes are introduced with clarity and proper structure, giving both businesses and individuals time to adapt confidently. When the rules are clear, investors sleep better. In 2025, the UAE made a remarkable leap in the government support index of the IMD World Competitiveness Yearbook, climbing from 43rd to 16th globally, surpassing 27 countries within just 1 year. That's a reflection of strong public financial management and government support. For a comparison, the UK currently ranks 30th and India ranks 40th, showing just how far the UAE has advanced in building a business-friendly, transparent, and dependable environment. #5, the allure of luxury living. Now, you'll often hear agents and agencies calling every new development a luxury project. But that's one of the biggest misconceptions from both agents and investors alike. Luxury isn't defined by marble flooring or Italian kitchens. True luxury in Dubai is defined by the community lifestyle and amenities offered under one roof. And when I speak about amenities, I don't refer to a simple gym, sauna and spa. I'm speaking about over 15 to 20 amenities, and at points touching close to 50 amenities under one roof. They're not in the form of a bonus or a cherry on the top. It's a baseline to offer certain standards with every development in Dubai. However, what may lack with every other development is the community lifestyle and how exclusive that certain project is from the other surrounding ones. With that, major big developments of Dubai come in the form of a master community, which includes from schools to hospitals, nurseries to clinics, public parks to offices within one mega project. This adds value for both end users and investors, and that is why I keep master communities in the first priority for my clients. Moving on to the next section of the video, benefits of investing in Dubai's real estate market. One of the most common questions investors always ask is, what sort of ROI can I expect in Dubai compared to other cities globally? Let's start with rental yields. Dubai offers an average of 7 to 8% gross rental yields, which already puts it ahead of majority markets globally. But the actual value of investing in Dubai isn't behind the 7 to 8% gross rental income. It's actually about what you keep in your pocket. And that's where the tax-free benefit comes in again. When speaking about the 7 to 8% gross rental income, you're only paying off service charges, which stands as the sole additional cost of owning a property, meaning after paying them off, you would still be netting an average of 6% to your pocket. And if you target the right off-plan opportunities in Dubai, where you might have to wait 2 to 4 years before receiving your keys, net yields can climb up to 9 to 10%. Now let's put that into perspective. The rental yields in UK, US and India sit at an average of 2 to 5% annually, out of which you pay 10 to 40% in taxes. And when you adjoin the other additional costs such as the service charges, maintenance fees and property management, you can imagine what you're left with in your pocket. When all of that is deducted, the net income left in your pocket is significantly lower than what you are left with in Dubai. Number 2, strong capital appreciation. Beyond rental income, the real game changer in Dubai's real estate market is the capital appreciation, where investors see the fastest and the largest returns. On average, properties in Dubai appreciate 7 to 15% annually, but when you look closer, you would even find transactions where properties have appreciated 30, 40, and even up to 50% in a single year. Now that is something which is truly exceptional in my eyes, and something which cannot be seen in any other real estate market globally. Now you might be questioning, what if the growth was only because of the boom seen post-COVID? And what if the market sees a correction now? Wrong. What gives investors the confidence that the market will keep growing is the constant investment of the government into Dubai's infrastructure. The government has committed billions into the ongoing projects and has detailed long-term plans for the next 15 years. This includes the D33 aims and the 2040 urban master plan. One major goal of these plans is that by 2040, over 60% of Dubai's land parcel will be dedicated to greenery, parks and open spaces, improving the environment, lifestyle and quality of living. That's why I always tell my investors to invest into an area where the government plans to invest in the future. The takeaway is simple. Buy in the right place today and your capital could double in just a few years. Number 3, easy entry for foreign investors, 100% foreign ownership in designated zones. For foreign investors, Dubai offers full ownership in designated free zones, making it incredibly easy to enter the market. These freehold zones include some of the most desirable locations today, including iconic locations like Dubai Marina, Palm Jumeirah, downtown Dubai, and close to every new upcoming off-plan launch. With that, over 400 plots along the Sheikh Zayed Road and Al Jaddaf were transformed from leasehold to freehold, expanding opportunities even further. With freehold ownership, you own both the structure and the land beneath it. You can sell, lease or pass it on to your heirs without worrying expiration dates or local sponsorship. In simple terms, full ownership, no middleman, no expiration. That's what freehold means. Number 4, residency visa through property investment. One of the biggest attractions for investors to put their money in Dubai is the opportunity to obtain residency when buying a property here. Now this includes two categories. Number 1, the 2-year property visa, which is on an investment of 750,000 dirhams or more. And number 2, the 10-year golden visa, which is on an investment of 2 million dirhams or more. Both these visas are auto-renewable under a condition of you having that investment standing in Dubai's real estate market. However, there is a small catch here. For the 2-year investor visa, the full 750,000 dirhams must have been invested to qualify. But for the 10-year golden visa, only 20% of the 2 million dirhams needs to be invested, and then you're eligible to obtain the visa immediately. And here's another interesting point. The minimum investment value for either of the visas doesn't have to be tied up with a single property. For instance, if you're investing 1 million dirhams in 2 different properties, that still makes you eligible for the 10-year golden visa. These visas come with real benefits: the ability to live in Dubai indefinitely, sponsorship of family members, and a more predictable life plan. Importantly, the link between real estate and residency raises the attractiveness of purchasing a property rather than renting or investing elsewhere. Number 5, flexible payment plans from developers. Dubai developers have become increasingly investor-friendly, offering flexible payment plans, making it extremely easy to enter the market. Some developers offer post-handover payment plans stretching up to 8 to 10 years, allowing investors to manage cash flow efficiently. Even with the standard down payment of 20%, majority developers offer the feasibility to stretch that into 2 payments where you pay 10% upfront and the next 10% within the next month or 2. This reduces the upfront financial burden and makes building your investment much smoother. On top of that, recent regulatory changes now allow major government-backed developers such as Emaar, Nakheel and Wasil to be offered mortgages even during construction once the project has reached 50% completion and 50% payment has been done. Shortly after, big private developers like Tamak and Bengari were included in the list. These initiatives makes investing in Dubai more accessible and flexible, giving buyers the ability to build their portfolio while also managing their cash flow efficiently. Section 3, hidden cost and additional fees. Number 1, Dubai Land Department fees, or also known as the registration fees. 4% of the property value, only to be paid when purchasing the property, not when selling the property. Think of this as more of an insurance fee, as DLE is not just the one who handles the registrations, but also does the developer background checks and ensures quality control during construction and post handover. Number 2, agency commissions. 2% of the property value as a market standard. The good news, only needs to be paid on secondary ready properties or off-plan resale properties which are under ownership but still under construction. For off-plan properties which come directly from the developers, you pay a 0% commission on it, making these purchases more attractive for investors. Number 3, service charges and maintenance fees. Service charges are basically annual fees used to maintain the shared facilities such as the lobbies, elevators, landscaping, and the amenities. The typical ranges for mid-range apartments are from 15 to 20 dirhams per square foot, for high-end apartments between 25 to 35 dirhams per square foot, and for villas and townhouses it's much lower at an average of 2 to 8 dirhams per square foot. Don't take these service charges for granted. They can take up to 10 to 25% of your gross rental income. So it's important to factor them in your investment calculations. Number 4, mortgage costs and financing considerations. When financing a property in Dubai, the first obvious thing to consider are the interest rates, which sits at an average of 4% for residents and 5% for non-residents. These interest rates are typically fixed for the next 3 years on your pre-approval. As a resident, you can secure up to 80% financing, while as a non-resident, you can only borrow up to 65% of the property value. The other cost to keep in mind when obtaining a mortgage would include a registration fees, which is 0.25% of the property value, plus a 290 dirhams fixed fee. Bank processing fees, typically 0.5 to 1% of the loan amount. And lastly, property valuation fees, typically between 2,500 to 3,500 dirhams. Factoring in these costs are essential for understanding the true affordability and ROI when purchasing a ready property. Comparison internationally, still favorable overall. All of these costs are important to keep in mind before purchasing a property. But even with these fees, Dubai remains highly favorable compared to many global real estate markets. In most of the other countries, property taxes and capital gains taxes are significant, often far higher than all the combined cost you would pay in Dubai. Mortgage interest rates elsewhere may also be higher, and non-residents often face stricter regulations when trying to secure financing. Hidden fees exist everywhere, not just in Dubai. But in Dubai, they're transparent and predictable. You know exactly what you're paying upfront, which makes investment planning much easier and less riskier. Section 4, a look back, Dubai's real estate history. Early 2000s boom and the birth of freehold property. In 2002, a pivotal law, Decree number 3, came into effect, allowing foreign nationals to own freehold properties in Dubai. This was a watershed moment. Neighborhoods like Dubai Marina, Palm Jumeirah, Emirates Sills, and Al Barsha exploded with development. In those years, property prices in high-end zones grew rapidly. For instance, between 2002 to 2008, property prices in luxury areas grew by 150 to 200%. 2008 crisis and recovery, lessons learned. The global financial crisis of 2008 hit Dubai's real estate market hard. Property prices dropped rapidly, in many areas by as much as 40 to 60%. Massive oversupply, overconfident investing, easy access to loans, and construction delays exposed the market's weakness. But the recovery taught some important lessons. The government brought in stronger rules like the escrow account, stricter checks on developers, and RERA, the Real Estate Regulatory Authority. Many delayed projects were finished or reorganized, and buyers got better protection. By 2012, the market started picking up again. Expo 2020 era and massive infrastructure push. Expo 2020 marked another turning point. Even though the event was pushed to 2021 due to the pandemic, its planning and execution triggered huge infrastructure investment. The area around Expo City became increasingly attractive, not just for short-term visitors, but also for long-term residents and investors. Property values in nearby zones saw double-digit appreciations in many cases. One great example would be Pulse Beachfront, located in Dubai South Residential District. It saw 150% appreciation in the time span of 3 years. That's equivalent to a 50% capital growth annually. Expo didn't just change how Dubai looked, it redefined Dubai's infrastructure and network. Current maturity phase, sustainable growth, and long-term vision. Dubai's real estate market has now entered a much more matured stage. Growth is steadier and more sustainable, with a higher focus on long-term planning. Initiatives like the Golden Visa program, a stronger push for green living, and greater transparency in price and transaction data are helping shape a real estate market that is more stable, resilient, and future-ready. Moving on to the next section of the video, section 5, key market trends and current developing areas. Now, when you're speaking about the current market trends, is divided into 3 clear segments. Number 1, luxury segment or branded residences. There is a heavy demand for luxury or branded apartments in Dubai, both from end users looking to relocate into Dubai in the upcoming years for the price, efficiency, and prime lifestyle offered. And also from investors, as branded residences not only offer a higher occupancy rate, but also offer 30 to 40% higher rental yields, and supply at just 7%, causing a shortfall of supply to meet the market demand. Second, waterfront. Buyers from the UK, US, and Europe are leading this trend. The price per square foot offered here for coastal properties is significantly lower than what the price per square foot is in their home markets. And with the waterfront supply being as low as just 3% of the entire market, it offers a track record of 30 to 40% appreciation in a single year. And when compared to inland apartments, they appreciate at just 7 to 15%. Just to give you a few Mere examples of that, Palm Jumeirah, launched back in 2004 at a price per square foot of 500 dirhams. It's currently trading at 3,300 dirhams per square foot. That's equivalent to a 660% capital growth in the time span of 21 years. Blue Waters Island, launched in 2017 at the price per square foot of 2,000 dirhams, is currently trading at 5,000 to 5,500 dirhams per square foot, also equivalent to 250 to 275% appreciation in the time span of 8 years. That's the kind of exclusivity Waterfront offers. Third, villas and townhouses. Simply short in supply and holds a track record of appreciating up to 50% in a single year. And with very few developers offering projects with villas and townhouses, you have very few options to choose from, resulting in quick sellouts and offers the ability to the developers to increase prices rapidly, which indirectly leads to a higher and quicker capital growth for those investors entering into the initial phases. Hot current areas. Now, if you look at where Dubai's real estate market is heading towards, the government's main focus is towards Dubai South, which includes the Maktoum Airport, Expo City, Dubai South Residential District, and other major master communities such as Emaar South, Hayat, and etc. However, making an investment in Dubai South would be something which is more long-term. It would take up to 7 to 10 years to achieve the right value out of your investment. Now, if you ask where can I make money in a quicker and shorter time span, let's say something within 3 to 4 years, that would be either something which is along the coastline of Dubai or something which is closer to areas such as the DIFC, downtown Dubai, World Trade Center, and the airport, as that's where the current business hubs of Dubai lies. A mere example of that would be master communities such as Dubai Creek Harbour, Dubai Design District, or Dubai Maritime City, where in the time span of just 3 to 4 years, a double-digit return can be achieved very easily. So in simple terms, luxury waterfront villas. That's what defines Dubai's current property momentum. Now coming to the last section of the video, section 6, summary and future videos. Let's wrap this up. Dubai has repeatedly proven why it stands amongst the most dynamic real estate markets globally. With no taxes, stable leadership, world-class infrastructure, and a lifestyle that mixes luxury, innovation, and global connectivity, it continues to draw both investors and residents from all around the world, soon planning to touch 7 million residents by 2040. What truly sets Dubai apart today is its diversity. It's not about just one segment or one price bracket. Dubai offers affordable apartments in emerging neighborhoods from as low as 800 dirhams per square foot, going all the way up to 14,000 dirhams per square foot for luxury high-end villas along the coastline of Dubai. Every part of the market has its own rhythm, its own opportunity, and its own investment potential. Now, as we look ahead, there are 3 projects or areas that I personally love and have invested my own money in, as stated earlier in this video. Now, this includes number 1, Dubai Creek Harbour, a master community by Emaar located about 15 to 20 minutes away from downtown and DXB Airport, planned to be downtown 2.0, but more green, more accessible, and more modern. Additionally, being a part of the 2040 Urban Master Plan, it becomes one of the only evergreen opportunities in the market today. Number 2, Dubai Maritime City, the last waterfront community or island destination of Dubai, located about 20 minutes away from downtown and the DXB Airport, making it the closest island destination to them. Number 3, Dubai South, future logistics and aviation capital of Dubai. Big economic hubs such as the airport, World Trade Center, and the port operations will soon move to the south, which will not only boost the investment potential from the real estate perspective, but will move a big portion of the economy towards the south, making Dubai South one of the best opportunities for long-term investors. If you found this video insightful, I invite you to follow along and subscribe to this channel, as I'll soon be making 3 dedicated videos to all of these 3 opportunities, explaining all the way from the development vision to the investment potential. This is Usman Nasir signing off, and I'll see you in the next one.